Hello, it's a chilly old Wednesday the 29th. I'm FxPlew and this is the market brief. So, shots were fired. It's all kicking off with politics versus economics. After Andrew Bailey said that the current outlook for UK growth is the weakest in his lifetime, both the Treasury and Sunak's office has piped up to refute his concerns. In their view, the economy has turned a corner. The press wanted in on the action too. They claim that Bailey's comments were an attack on Hunt's autumn statement, perhaps fanning the flames of an invisible conflict after the government took credit for halving inflation since Sunak came to power. In reality, neither Sunak nor Bailey can really take much credit for the drop in headline inflation. Neither control foodstuff prices any more than they were responsible for the decline in energy prices throughout the summer. Nevertheless, the fall in inflation has provided the Bank of England with encouragement, and Sunak gets to claim he delivered on his pledge to halve inflation. There we go. Over in the US, the Fed's policy and future plans remain a key focus of the market. Debates rage over whether the US rates have actually peaked and or when we should expect a rate cut to follow. The fall in inflation seen over the past few months has been encouraging, but while the Fed policy looks to have paused, they remain prepared to hike rates again if the data demonstrates that demand once again is significantly outstripping supply. This possibility is preventing Powell from calling a peak of the rates tightening cycle. And it's worth him leaving his options open. A soft landing does still look to be on the cards for the economy, but the Fed must be ready to act should inflation begin to rise again, or indeed if activity begins to fall off. Ahead of the next Fed meeting, which is on December the 13th, we'll have sight of the payrolls data, that's due next Friday, and the inflation data for November. If either show a surprise to the upside, the market may well rebalance interest rate expectations, and that means we could see a reaction for the dollar. For now though, the dollar continues to lose ground. Sterling peaked around 127.15 against the dollar yesterday, and the dollar index slipped back to 102.60. Good morning. We kick off this morning around 127.05 against the dollar, 115.65 against the euro, and euro dollar is around 109.85 on the open. That's it from me. Better go and rescue my dog. All the best.
If you do not have a clue, then just tweet through and ask FxPlew.